Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update for this Monday, and this is the 17th of March, 2017, about 3:15 p.m. Central Standard Time. Okay, markets are going to finish up in the NASDAQ, and this is a chart of the NASDAQ weekly. I don't know why my parts that I put on it didn't stay, but I checked the other charts did. And you can see how this market's just gone up, and you're at highs for this whole move on a weekly basis. There's just nothing bearish on this chart as you look at it that way. When we come to an area chart of closes, you've gone from the end of 2016 actually, and come straight on up to 53.97, and it's pretty hard to argue with what the closing prices have done. When I come to just a daily bar chart, here's what the pictures look like. And as you can see, you're knocking on the door of all-time highs, which people aren't talking about. But getting there has been an ugly pattern. It's almost as though the momentum has fallen apart. The market got up here at the 5,400 level, sank back to 53.37s, come back up here, but it's been a rocky road. You had a pattern of lower highs, lower lows, and with the rally now that you got up through 53.80, you have a higher high and a lower low. On the swing line basis, that's not a trend. To have a trend on swing lines, you have to have a successive pattern of higher highs, higher lows, a downtrend, lower highs, lower lows, plural. And at the end of this, I'm going to talk about my charting course, which many of you took advantage of over the weekend and bought because we have a special on it. A special will not stay up, so if you're going to do something, you got to do it fairly soon here on that. So let's talk about the market also in relation to moving averages. Moving averages, as I teach them, are a reference point on a chart. An area of markets that if they're over, sometimes you say they have a bullish bias, under a bearish. They can also be, if market's above it and fall back to some of the key averages, a support zone, or if they're under it, they rally to a resistance zone. One of the key averages is the 18-day moving average of closes. Got that? And what that represents to me is the reset button, the line in the sand. And when markets get back to that number, they're looking to recharge, to figure out what they're doing. And I think that's exactly what happened here. Now, the market has nicely rallied away from that low, about 60 points. But we know we're going to have the FOMC announcement on Wednesday. Don't know what the reaction's going to be. The trade's going to look at the dot plots to see how many more rate hikes most of the voting members see coming forward. Is it 2 more, as the Fed chairman said? She thought we'd have 3 this year. Are they looking at more? Possibly less. We're going to get an idea as to what that all means. You've also come back to the upper Bollinger Band, and you're starting to run into a brick wall. Today's high was 5,400. 5404 is that number, if I'm correct. So you've got to be a bit careful where you're at with this right now. It's interesting to see where it's at, but you're in a resistance point that's narrowed in. Now, you had the easy run back here in relative terms. Now notice how this is narrowed in. That's often a sign the market's going to start chopping, so be careful. The slow stochastics lost their embedded reading right here. It's when the red line finally, after going sideways with the red and blue over 80, when the red gets under, as you can see here, 80. And that often leads to price and the 18-day average coming together, which they've done. And now the market's moved up back to the resistance point, and both numbers are again over 80. Now, if they can do it 3 days in a row, forget what I'm saying right here. It just becomes more of a bullish challenge. You still have to push out the Bollinger Band, and we'll see if it can do it. But that would be the argument. What are you tonight? Overbought. When you come to the June S&P, when you lost the embedded reading right back here, the market should have gone back, my theory at least, to the 18-day average of closes. It certainly has. And it, too, is narrowing in on the Bollinger Band. But unlike the NASDAQ, you have lower highs and lower lows now. Therefore, you're in a bear pattern, but prices are over the 18-day average. And as I said, the 18-day average is many things. One of them is what? It's a filter of the swing line, and when prices are over it, you have an upside bias. When the trend on the swing line is down, the two clash with each other and you have nothing. Momentum-wise, you have flat market. Remember, the idea of a slow stochastic oscillator is that momentum is going to lead price, and this has gone neutral on you right now. If you take a look at the Dow Jones, you have a pattern. Yes, it's really higher lows, but now we have lower highs. That's a little ugly. So it's narrowing in like that, okay? Where's it all happening? Against the 18-day average, and momentum is still pointing down. So what do we have? I think we have a market that is in a holding pattern where it's sort of run out of gas temporarily, trying to figure out what next. The market that's been the weakest on this corrective move, if you want to call it that, has been the Russell, which has a higher high, lower low pattern. But once it got to the lower Bollinger Band, the black dashed lines, it started grabbing for that support that those bands offer to see what's going to happen. Now remember, what a Bollinger Band is an algorithm, this band and that one, meant to keep the market trading within it 95% of the time. I've even done studies as to how many days above and below and how it works, and it's all in my charting course to give you ideas with it. Done backtracking of how much money it's before it turns back up, a lot of stuff. And all I can tell you is you don't fight Bollinger Bands. They can stay 5 days under, they'll pop. But getting back over the right-hand side is not bullish. It just means the market's back within the band. You're not supposed to, as I teach it, sell under the lower band. You wait for the market to get over it if you're in a bear trend. Here is a market that almost every day hits the 18-day average of closes. I woke up this morning to a gentleman on Bloomberg saying, oh, no, I see the market is now bottomed in the VIX. Well, I can't argue because I don't know if this is a top or a bottom. It's only sideways action. Breakout under, it's a top. Get back over, it's a bottom. Right now, where are you? You are in the middle of Hades. You are in the middle of nowhere. I don't know how a VIX trader is making money on that. Look at how often this 18-day average is hit, and look at the massive sideways action from what? From the VIX. Now, let me give you a secret here. If the market breaks out to the top side, that's very bearish the stock market. It means volatility is going to pick up. Everybody wants insurance. And with this size base, it could be a bigger correction than you think. Break out the other way, and I know this sounds nutty, but you're going up again to the upside. At least those are my opinions. Right? What's this telling you right now? Nothing. It's telling you be an observer. Then we get to the June 30-year bonds. Well, you would expect that interest rate futures are under pressure because the Fed, I think there was a 95 or 96 percentile the last time I looked at it this morning of a rate hike on Wednesday. Lower highs, lower lows, oversold at the lower Bollinger Band. 10-year notes, probably challenging that band again. Lower highs, lower lows, oversold. Trend clearly down. And in the dollar index, everybody's talking how strong the dollar index is. I hate to tell you this. You got lower highs, lower lows. You're under the 18-day average, and momentum's pointing down. Short term, that isn't what the dollar's doing. Yes, price is up today, but from where it's come from, you went down about 100 points, a full penny on this at this point, and we have to see what it's going to do against this 18-day average of closes. In the euro currency, you got up to the Bollinger Band on Friday, gave it a kicker today, kicked the market up to just about the 100-day average, and now you're getting a bit of a reversal in an overbought area. Probably some money saying, you know, against those numbers going into the Fed meeting, maybe I pull something off the table. In the British pound, market's up today about 40 points, still has an embedded reading. I contend the bears are still selling this, and you've got a market that's got the 18-day under the 100. You've got Ms. May possibly tomorrow winning from Parliament the ability to go forward with the Article 50. What that means to the market, I don't know. Is it sell the rumor, buy the fact, or is it more bearishness coming? The bad news is the Scots are calling, at least one of their ministers is calling now for another referendum vote. That isn't going to happen this year. It could happen in 18 or 19, but remember, this is a 2-year deal to unwind the Brexit, and the first step is delivering the Article 50. In the Japanese yen, you've got a pattern of lower highs, lower lows. You're bearish. You hit your profit objectives right away. You're bouncing away from the lower Bollinger Band in an oversold condition. If we come to April crude, now here's a market that is now, I believe, 1, 2, 3, 4 days in a row under the lower Bollinger Band. Has not embedded. You can see right there. Now let's go here. All right, so Thursday, both numbers are not under 20. Friday, both are. Today they are. The odds of a market embedding are small. Therefore, the odds favor an attempt at a rally tomorrow to get back over the lower Bollinger Band just to the right-hand side of it and see if it can stop the embedding. If it can't, these rallies are going to get sold. And there's something else on the chart you got to look at. Look at how the 18-day average is getting ready to cross under the 100. That's another bearish factor. This chart got very ugly, and all this sideways action, this is like the VIX. When the market finally broke out and stayed out of it, game over, and it's just gone like that because of that power that the market threw. It could even get worse than this. Rebob gasoline under the Bollinger Band, but not 4 days. I think it's 2 now. It's not embedded. You can see you've got day 1, day 2, and Friday, no. Thursday, no. So tomorrow could also ruin this. This is a chart that normally at this time of the year starts making seasonal lows. Hasn't quite done it yet, so it's interesting. And here is a market that, according to more research, typically does make its seasonal low back at this time frame about a week ago. Certainly done a good job. If you had my report today, I was explaining why I thought the market was going to run out of steam up at the upper Bollinger Band today, along with what's called a window envelope. And in speaking of that, let me explain what my charting course does. If you're a regular watcher of these videos, it's time to learn how to do this on your own. And yes, the way I teach it in the charting software I'll give you on one of the packages, you can chart ETFs, stocks. The same principles apply as they do in the futures markets. And how it works is I have a series of 54 videos. They're built in. They average probably 8 minutes a piece, something like that. You watch what I do. The charting software will carry you back to that point in time. You do the same thing. Then in the mornings, you join me for what I call my morning coffee, my morning subscriber video, and I go through 40 charts in the same sequence every day. Those will be up to date. So let's assume you're studying the slow stochastics. You'll see me how I'm doing them on the 40 charts, and I'll discuss them with you. Bollinger Bands, how do you use it from my perspective on it? Window envelopes, a profit-taking tool. How do you get to it? Like in the natural gas, when you get to a third flip. So you're going to get all this. You're going to learn how to plot them on charts. Then I'm going to give you numbers for the window envelopes, and you'll have a page you just go to and you plot them. I do all the work for you. You get daily written updates, sometimes 3, 4 a day, generally 2 a day, specific buy and sell, and then these morning videos where I wake you up for all that. It's pretty simple. Call us to find out more. You can go to our website. And on the website, you'll see a video under the word education that'll take you right there and explain the facts of how it all works, what it is. And folks, I see courses. I've taken them. I've done courses. I've sold my own courses for hundreds of dollars. I've got this course priced at $89.95 right now with a special. Use the word Ira 15. You'll get $15 off the course. Charting software, 30-day access to my research, 30-day, did I say the software? The course itself, everything you need. Come on, bet on yourself. You can click right up here, by the way, if you're watching me on YouTube. It'll take you right to the page with the videos, everything that you need. And other than that, that's how you go about getting the course. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.